All right, fam, Dan Ives has dropped a pretty big bombshell on Tesla. Don't worry about subscribing, tapping the like button, or looking for the Discord coaching link. We'll talk about that in just a few minutes. We first have to sit here and listen to what Dan Ives has just said about Tesla and why you can expect a $2 trillion market cap, maybe even $3 in the next 2 to 3 years. Let's take a listen to Dan Ives right now.
Joining me now, Post 9, is Wedbush's Dan Ives. He is now the global head of technology research, a new title, a fancy new title to go with your jacket. Welcome.
Thank you.
Congrats.
Thanks.
All right. So why is this a game changer beyond the obvious of what people have seen thus far? This, what is a new and cozy relationship now between President-elect Trump and Elon Musk?
Yeah, I think it's the autonomous piece. I mean, if you look at full self-driving autonomous, I could argue it's the most undervalued AI play in the market today. And I think autonomous cyber cab and the timing, I think it could get accelerated 2 to 3 years. And that's important in terms of from a sum of the parts. This stock, that could add $1 trillion of valuation alone. And you could be looking at 20, 30% more revenue per year that you even see today.
You think $2 trillion valuation over the next 12 to 18 months is reasonable?
I think it's conservative, potentially, if they actually execute on the vision that I see, not just in terms of autonomous and AI, but really it's more about that software penetration within Teslas from an FSD perspective. Mm-hmm. It changes the whole business model.
I'm trying to think of, so they have less than 10% market share in China, correct? Mm-hmm. BYD's got like a third. Demand for EVs is already sort of slowing globally. So if you have a pickup in tariffs and you have what is a more protracted trade war, what does that do to Tesla's prospects in China?
Sure. I think there's one big X variable. The bet for the ages.
Pardon the pun.
No, and I think the bet for the ages for Musk was betting on Trump because he is going to have a significant seat at the table when it comes to the China tariffs. I think especially on the AI trade, I fully expect there'd be carve-outs relative to Tesla and Apple when it comes to any sort of tariff back and forth. And I think within China, Musk has been that sort of 10% politician, 90% CEO. China just had a record quarter, if you look back. So I'm not of the belief that China is going to be a huge headwind. I think overall, this is a game changer for the story. You know, when you look at, I think over the next 12 months.
Is there any spreading yourself too thin risk? Mm-hmm. You know what I mean?
Yeah.
Right? Guy's running like all sorts of stuff, and now he's got a foot and a half in he's going to have a foot and a half in the Oval Office whenever he wants it.
Look, being essentially a whisperer, really a strategic advisor for Trump, I mean, it's going to just put another sort of balancing act for him between SpaceX, Tesla, Boring Company, and others. But my view here is that investors will take that because Musk having a strategic view and a strategic, I think, essentially chair in the White House is significant for AI. It's for autonomous. But most importantly, the biggest regulatory issue that they've had to navigate from an autonomous perspective, a lot of that now starts to dissipate. And that's a key part of the value. I mean, I ultimately look at this as unlocking $1 trillion of value in Tesla, AI and autonomous.
Simply because of Donald Trump's win?
Simply because of Trump's win. Because Trump's win changes the whole game for Musk, for Tesla, for autonomous, for FSD. They'll still have issues on states. This is not going to be, 100% smooth road. But this is a much different stock than it was a week ago with Trump in the White House.
Is there any risk whatsoever? I mean, I ask you this just as like kind of devil's advocate. I don't know what the likelihood, if any, there actually is. But is there any risk whatsoever of a larger role, bigger than foreseen, within the administration to where he would potentially be a seller of stock?
Sure. So I don't see that Musk is going to take a formal cabinet position. We'll call him like an AI ambassador. He's going to create. I mean, he's going to be very strategic. I think in very key aspects on tech, on tariffs, on AI. But I don't see any issue from a cabinet perspective, selling of stock. And I'd also say broader from a tech perspective, whether you're an NVIDIA investor, Apple, Musk having a say in AI and in tariffs when it comes to China. As odd as it seems, there's actually a comfort in him having that seat at the table versus a 202 bureaucrat.
So
there's a lot to talk about. Dan Ives said quite a bit in his interview. I'm going to break it down for you. Tesla, he says, is undervalued more so than any other AI stock, which would include AMD, Nvidia, Taiwan Semiconductor, and all the rest of them. He also expects to see a 20 to 30% revenue increase year over year with a potential 2 trillion or 3 trillion market cap in the next 2 years or 3 years. That is a 2x return or a 3x return in the next 2 or 3 years, as long as Tesla follows through with what they intend to do with full self-driving, AI, the software, and the cars themselves. He also said they had a 10% market share in China. BYD has a third, which is 33.3%. And he's talking about EV demand slowing down globally. However, it was the biggest bet of the ages for Elon Musk supporting Trump and getting the victory, as he has one foot in the White House. And he's going to be working, advising Trump to some degree. That's yet to be seen exactly where that's going to go with Trump. But the mere fact that he's got, one could argue, some form of leverage in the White House, and it's going to give him an advantage, considering the fact that he's going to be working really closely with Trump and the amount of money and power he has, and being friendly with Trump and getting along. Two business entrepreneurs, might I add. This would definitely give Elon and Tesla, one would think, an advantage, serious advantage as well. And like he had said, it's a seat at the table for Elon Musk and Tesla for tariffs, full self-driving AI software, and it's just game-changing overall for Tesla in general. And now one begs to ask the question, how much of a say is Elon going to have in tariffs, big tech, AI, full self-driving, and regulatory issues across the country? With him being pretty much seated at the table here, and no, we're not talking about Roman Reigns and head of the table. We're really talking about him having a seat at the Oval Office table. But in reality, what this could mean is that he's going to have influence with Trump, and together they're going to have influence on full self-driving regulations in the states that are stricter, and tariffs that are going to benefit to some degree or fully Tesla in general with tariffs. And it's also going to be beneficial for full self-driving, not just with regulations, but software advances, AI software as well, tech in general. This is a really big thing for Tesla. So long story short, to just recap all of this in a generalized overview statement, pretty much it's going to be hard for Tesla's value to go down now. I mean, they pretty much have a lot of skin in the game now and a lot of advantages. It's very advantageous for them to be where they are now, especially with Elon sitting at the table with Donald Trump as president. And I believe this is going to be big as well for Tesla. Now, I feel there might be some pullback coming for Tesla slightly. It's hard to say for sure, but going into the end of the year and into next year, there could be some uncertainties for the first few months. But relatively speaking, a year out, 2 years out, I'd like to think that Tesla would be much better off than they are right now. And it goes without saying, it's the likelihood scenario. And with a 2 trillion market cap, that's double. That means Tesla has a very real world possibility at being $600 to $800 a share in the next year or two, maybe sooner than that. We don't know. Tesla just went up from $210 to $330 over the last 2 or 3 months. $100 in 2 or 3 months, it doubling in a year or two doesn't seem that far out of the picture now, does it? Considering all things I just said. I want to show you guys where I would sell puts and get into Tesla, make some money, solidify myself a position, maybe trade Tesla on a smaller account. I'll show you guys exactly how to do that briefly, show you how you can trade Tesla on a smaller account. If you're on a larger account, I'll show you how to get into some positions here and where I think a good position is and how to make some money now to lower your average cost on getting into this said position on Tesla. However, before I do that, this is going to be some advanced strategies. If you're having trouble understanding this or the market cap or anything I'm discussing with you, because the market is pretty complicated. And if you're watching this trying to learn how to grow your portfolio, understand trading and investing more so than you are right now, I would love to help you. I told myself when I hit rock bottom 6 years ago that I would help others if I could achieve financial success. And when I did that, I set out on a path to help others. Grew up in a Catholic household, parents were strict on me, and my dad works with homeless veterans, getting them off the streets. And I've been helping with him to help homeless veterans for the last 6 years as well. But I wanted to set out on my own path and help people. And that's exactly what I'm doing. If you guys want to make profits, grow consistently and safely, and you want to be able to potentially retire earlier, or maybe you just want to retire now. I would love to help you. You guys can sign up at any time and investwithcorey.com. Links in the information box below. I have students that have taken their portfolio from 8K to 25K. I have other students that have taken their portfolio from 300K to 470K, and the list goes on. But not only that, you guys can see on the screen after the comments, you can see my portfolio that I'm up 16% in 3 months, and I am up over 7% in 1 month, over $30,000 in 3 months, and that's a really consistent amount to make. And you can see that I'm up well over $15,000 in 1 month. So you can see that I lead by example. Really, honestly, don't trade as much as I should in my challenge account, but you could make even more. But this is very safe and consistent. And you know what? I would love to help you. So if you guys are looking to change your life, I would love to help you offer a full Discord training course and one-on-one coaching. If you show up committed to learn, I show up committed to teach you, and I look forward to helping you change your life. One love, fam, and I'll see you when you're ready. But don't take my word for it. Listen to what Adam has to say about my Discord and my coaching.
So I started with $15,000, right? I am now at $40,000. Okay. And I'm so proud. It feels, amazing to be able to share this, because I know that there's so many people that will do the same, right? You have to just trust Corey and trust what he's teaching and what he's offering, because he means so well.
Okay, so we're looking at Tesla here, and we can see that it gapped right here, and then it gapped over this gap. It did not fill this gap on the daily chart, and then it gapped again. The chances of Tesla falling down this much and dropping and filling 1, 2, and then 3 gaps, I mean, I've seen stranger things, but it's a little on the unlikely side, honestly. We're unlikely to see that gap being filled. So we do have a gap right here. So I'm going to fill this gap right there. Let's just make sure that it's accurate. There we go. Zoom in just a bit. Going to give ourselves a little bit more clarity here. So pretty much on the daily chart from 218, 219, all the way to 242, it's $20 gap, and it gapped over this. There's a lot of gap right here. It's going to be very, very difficult to fill that. As you can see, the candle started dipping into the gap. If Tesla was to fall down and break through this support of the gap, it would plummet. It would end up back at like 184. So if Tesla was to ever fill this gap, that would not be good. We'd be right back to where we started back this summer. Would not be really good at all. Be very terrible, if I was to be honest. But I don't think that's going to happen. It's going to be hard to fill that, because it also has to fill another gap. It has to fill this gap right here. So we are going to touch this candle right there, and then this one down here. This is a really big gap. There's 2 of them. So that's going to be difficult. We have 2 gaps on Tesla. I do think now that it's filled this gap right here on the daily chart, I'm going to delete all this, make a little bit of room for us. There we go, so we can see it more clearly. With this gap right here, it filled. So this is the new support. So 274, 275 is kind of the floor right now, which I expect. On the daily chart, I would say that other than it being a floor, we've got a pretty solid support about halfway down in this candle. Somewhere around here be solid, right where the 10-day is. So it's safe to say that 305 to 310 is a pretty solid spot to sell puts. Maybe 320 if you want to be aggressive, because let's face it, Tesla dropping $9 in the next day or even the next week is a little unlikely, but it could happen. And so we're going to look at the 4-hour chart. We can see that the 10-day is kind of diverging down to the 20-day. We got some consolidation. I anticipate a little bit of sell-off, something like this, and then it'll come back up and then come back down. But I think right around 300 to 310, very, very solid at this point. Obviously, 300 or 305 is much safer. But right now, it's going to consolidate a bit. Everyone that purchased Tesla, all the investors that bought into Tesla, all the buying happened with the Trump effect and with Elon effect combined with the elections. It made its move. It's overbought. Now it's kind of coming down. There's some sell-off happening, but not much. So what I anticipate is we're going to have some consolidation, maybe a dip, then it runs a little bit again. But we're going to see some consolidation to some degree between now and January, February, because now that all the investors that got into Tesla are now in, there's going to be some stragglers that eventually get in. Some people are going to be selling. So you have some mixed emotions here. But what's going to happen, in my opinion, is that now we're waiting to see what happens. Revenue beat the expectations on the next earnings call, which is January 22nd. So we're kind of right now waiting for January 22nd's earnings and inaugurations in January. So we're really waiting for January. I wouldn't expect a whole lot, but we could have a move down to the gap, or we could have a move up. It's hard to say exactly. There could be a little something, but I think a majority of the big move has already happened, at least until January, with inaugurations and earnings. So what I would do is I would sell puts around 25 to 30 delta, slightly aggressive at 315 or 310 because there's some support there. And then for a small account, I'll show you exactly what you can do. So first off, with Tesla, let's go out a week to next week. Let's sell some puts. I would say 310 is slightly aggressive. It's going to give you $600 with a 26 delta, and that's because of all of the IV. I didn't even look at the IV, but I bet you it's like 100%. That's pretty close, 70%. Not quite as high as I thought it would be, but it's up there. This is a lot. So I'd play it safer. I would do 305. I mean, it's not that aggressive. That's $25 away in a week. It could happen. I would say if you're really aggressive, you could do 305 or 310. If you're a little on the safer side, you could do 300. 300 is pretty good. $30,000 up for $300, $400 is not a lot because you need $3,000 a month to be 10% or $1,500 to be 5%. With $350, this is going to be $1,500. This will be about 5%. So this is very safe. Very, very safe. $300 put, you get about $350 for it. Yeah, you get about $350 for it. This is about a 5% per month. It's $1,500 on 30 grand, 5%, very safe. If you want to make a little more money, then you're going to need about $700 a week to make 10% or close. So you'd have to be selling 315s. If you sell 315s, which is a 31 delta. So 30 delta, you stay around 30 delta every week. If the price goes to 340, you're probably going to want to sell a 325. So if you're going to sell a 30 delta, you can make about 3,000 a month, which is 10%. It's a little risky, but 300 or 305 is fairly safe. If you want to run a 2% return per month, which is what you do in big accounts, 290 or 295 is very safe, like very, very safe for a weekly option put. This is like a $13. This is very safe. So if you have a small account, you're probably wondering, what do I do with Tesla? It's 30 grand. Like, I don't have 30 grand. Well, you have multiple options for Tesla on $30,000. I'm going to give you a brief breakdown here. You could sell a put credit spread, but you don't want to be selling 30 deltas on a credit spread. I wouldn't go beyond 15 or 20 on Tesla. In fact, I'd probably keep it to 10 or 15 at the highest. So at 295, that's not even good enough because that's a 13 delta. It's just not enough. I go 290. This is a 10 delta, 90% chance of success. Very safe. Click on that. Then you'll click on buy. Come down here to 280. This is $1,000 spread. So think about this. Instead of putting up $30,000 to make $400 or $500, you're putting up $1,000. You're actually putting up $913 to make $87. So if we were to put $30,000 up, which would be, I think, about 30 of these contracts. Yeah, 32 actually. If we do the math, doing the credit spreads are a lot more risky. We'd make $27.84 versus $400. So they're more risky, but a lot more money. But we're only going to run one or two of these in a small account. Keep it to like 3%. So if you have 100 grand, no more than 3 of these. If you have 50,000, no more than 1 or 2. And that's just me playing it safe. If you have a smaller account than 50,000, say you only have 10,000, you could run 1 or 2 of these, but be very, very, very safe because that's 10 to 20% of your portfolio. But if you're just running 1 or 2 of these, you can make $174 a week. And that's really good on a $10,000 or $20,000 account. On a $20,000 account, doing 2 of these per week is 5% return. It's a very good return. And it's very safe because Tesla would have to drop $38, almost $40 drop in a week. I mean, it can happen, but it's highly unlikely. And this is another option. Your third option is you could buy a leap option, which is a lot safer, and it's a lot better of a strategy for a smaller account. Not as aggressive, not as much money, but cheaper for a smaller account. So what you would do is you'd go out to June of 2025. You buy a call in the money, deep in the money. 70 delta would be perfect. There's 77. This is 75. This is 74. Volume and open interest is good. 280. Go 290. That's not as good. Open interest and volume seems to be better on the 280, which is $8,000. But if you have a smaller portfolio, this is not enticing you at all. If we go to a 69 Delta, this has got a lot of open interest. It's a 300 call. This is about $7,000. If you want to go a little more aggressive to 66, that's really pushing it. It's not worth it, in my opinion. I would do the 300. So you figure instead of spending $32,000 or $33,000, you only need $7,000. For every one of these contracts, you can sell a covered call. So as the stock goes up, you can roll your covered calls out and up, and you can make good premiums on covered calls against this leap option while the leap option is appreciating in value. What this delta means at 70 or 69 is every single dollar the stock moves, you will earn 70 cents on this call option, and the gamma will increase with every dollar and raise the delta. So as the stock goes up, this will go up in delta as well. On an 80 delta, every time the stock goes $1, the option will go up 80 cents. It's like controlling 69 shares. So this is really good. You can buy that, and then you can sell covered calls. Just remember, if your covered or short call goes deep in the money and the stock flies above your short call, you can buy it back for a loss and then sell the leap option for a gain. They work in tandem. If you end up losing 1,000 on the short call, your long call, the leap option, will gain roughly 1,000 in value. They work pretty much in tandem. So you can sell covered calls going out a week. And so right now I probably would look to sell a 350, which looks to be about a 20 delta, 25 delta. Let's take a look at that. We'll look to sell 350. It's a 33 delta. It's a little aggressive. You could go out a week and sell a 360, 26 a little safer, 365, 22. You could do that. 362, 365, make 500 a week or $2,000 a month. So you could, looking at this, you could buy one leap option for $7,000, and that will bring you in between $1,500 to $2,000 a month. You basically double your money every 3 to 4 months. Leap options are very powerful. I'm hoping you guys learned something during this video. And if you're having difficulty understanding and you'd like to learn a lot more of these strategies, which I have dozens and dozens of and so much to teach, I would love to mentor you and help you grow to understand this better, to retire early and enjoy your life the way you deserve it. You guys can sign up at investwithcorey.com. Links in the information box below. I would love to help you, fam. Thanks so much for being here, and I will catch you guys on the next video. Take care of yourselves, and remember, let's grow our wealth together. Take care, guys.